Well, it's that time of the week where we check in with Robin Cross, and he is with StoneX in Chicago. He's our regular lumber contributor, and he keeps tabs on what's going on in that market. So what do you see happening here today, Robin?
Good morning, Marlon. Well, not a lot, buddy. We got, let's go through some prices first things first before I get going here. November is trading currently at $645. That's up 10.30 with only 19 trades. You have January coming out at $670 even, up $3 with only 6 trades. You know, for the last several weeks, and I would say pretty much since Labor Day, lumber has been a very lackluster trade. You know, September closed the month with only trading 6,200 contracts for the entire month. That would be the second lowest volume in our 38-year history. The only other time we saw volume this low, or the market this thinly traded, was just after the housing market crisis, which I remember all too well, of 2008. And just for comparison, the record low at that time, December only traded 2,300 contracts, and January of 2009 only traded 2,600 contracts. So if we think it's this slow, we've actually seen it slower. But, you know, like I said, only one other time in history. You know, this volume situation could really be attributed to several different factors. First, what, you know, our viewers know first and foremost is the market's really kind of hung over, you know, from going from 1,700 high to a $454 low. I think at this time, traders, especially on the Canadian side, because they closed the books on the last month of September, are content with what they made or lost, you know, going into the year. So I really don't see any appetite for additional risk. And it's also tough where the market's at because, you know, you really don't have something to jump on by the way of news, right? You know, we're a big premium to cash. We're about $100 premium. But guys they have this bullish sentiment in the back of their mind, so they don't really want to sell that, even though a $100 premium any other time in history would be a fantastic sell in lumber. So you don't have that. And then the flip side of that is, you know, we really have a different foundation, say, from 2008 to now. And 2008, to trade a car of lumber was only $1,200 in margin. We saw it as high as $11,500 a one lot here. It's down from that high. We're at about $7,100 to do a trade, but that's not inviting. That's not, you know, that's still too much money. If a guy calls me up and say, hey, Rob, I could do a Canadian dollar for three grand a trade where there's depth and liquidity in the market, why am I going to pay you $7,000 to hold one trade where, you know, it could be limit up or limit down? Another piece that keeps this a little slower, in 2008, we had ranges of only 10, 10, 15 on expanded limits, right? Now you're sitting at 42 and 63 of expanded limits. So that's a big comparison, you know, to risking $1,100 per trade to now risking $7,000 per trade. Guys are just not, you know, looking forward to doing that. So I do believe that with the market being slow, you know, the market's been pretty good about, you know, assessing these situations and trying to bring some traders back into the market. But I just think it'll be a little too late for us right now. Open interest coming into today. November only had 1,253 cars. That was actually up 7 from yesterday. Surprise, surprise. Jan had 489 for a grand total of 1,800. And you know how I always feel about that. You know, market, you know, low open interest usually leads to a strong market, you know, because the tendency is that sellers, you know, stay away just because it's so thin. But in this case, with a $100 premium, I still recommend guys to hedge. I think that this is a hedger's delight. And, you know, this is a good way to put lumber on the ground and not worry about winter. You know, winter, we've seen a lot of catastrophe in winter lumber trading. But if you have a built-in hedge, you have very little risk. So I would say, lastly, wait for the market to make a mistake. We know we have proven support. Call it 500 if you want to be, you know, above the low. 500 to key resistance, a triple top at 700. So, you know, when we're trading in between that 600, it's kind of no man's land. So, you know, I just say be careful and wait for a mistake for sure.
Well, Robin, great information like always. I appreciate that. We'll check in next week with you, Robin Cross of StoneX. He's located in Chicago. Now we'll pause right here and we'll come back. I'll get you updated on our cattle and hog trade right after this.